the intersection of AI and crypto is, I think, it's going to be the most interesting thing for some time. It certainly has been one of the most interesting things over the past 12 months. And I think that conversation is only going to continue to accelerate.
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Steve McKeon, managing partner at Collab+Currency. For anyone who's new, this is the WAGMI Ventures podcast where we do snapshots with interesting builders, founders, and investors from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Steve at Collab+Currency. All right. Hey, everybody. This is the WAGMI Ventures podcast. I'm Tanner, and I'm here today with Steve McKeon, managing partner at Collab+Currency. Steve, what's going on? How are you doing today?
Doing great, Tanner. Thanks for having me.
Yeah, thanks so much for coming on. I'm super pumped to chat here and grateful you made some time to come on. So just by way of orientation here, Collab+Currency, obviously one of the most established and prolific VC funds in the space, but I'm super curious with your personal story because from the outside, it kind of looks like academic/founder, if I could kind of encapsulate it. But I'd love it if you could maybe just talk us through your professional story and also talk a little bit about how crypto enters that picture.
Yeah, I'd be happy to. So I'll kind of like speed run my history here because I'm kind of an old dude. So I've been around with a few stops. But I basically started in tech after graduating college in the dot-com era. So kind of 99, 2000, right at the tail end of the dot-com boom, and then like fully witnessed the bust with front row seat. I was working at a startup in Silicon Valley. I was living in Palo Alto, totally watched that industry melt down entirely from inside one of the venture-backed startups. And so it was like Armageddon. It was like everybody I knew was unemployed. It was, that downturn in 2000 when the tech bubble burst was so acutely felt in Silicon Valley that it just felt like impossible to get another job there. And so I actually moved 2 hours north up to Napa Valley and ended up running a winery and ended up basically doing that for most of my 20s. Interestingly, the winery was still basically a startup environment because we had one of the larger facilities in Napa. And so many founders of new wine labels came to our facility to have us do all the work in terms of production. So we would take in the grapes, we would produce it, we would bottle it, we would label it, and then but it was their brand. They would go out and sell it. We were just sort of like facilitating all these sort of wine startups. And so interestingly, that was like very informative, weirdly, all the way to like the way we think about things today at Collab+Currency, because I got to watch dozens of startup founders who were basically starting a consumer product inside an insanely competitive product market for consumer products. Like there's thousands and thousands of wine labels, and like, how do you differentiate one from the other? How do you market it? How do you work with your distributors? Like all these things about how to market and sell a consumer product inside an insanely competitive environment was like really formative education for me. So I did that all through my 20s. I eventually got sort of like bored of the wine industry. It was like rinse and repeat with harvest every year. And I just felt like either I needed to go to like a really large winery or I needed to do something else. And so I decided to go back to school. I went to Purdue. I got a PhD in finance and started at University of Oregon in 2011 as an assistant professor. And right when I started, some students came up to me in one of my MBA classes and had an idea for a software company. And so I started kind of advising them, and eventually we co-founded the company together. It was a company called Skyward. It was commercial drone software. And we grew that up and sold it to Verizon. And so I was doing the professor thing simultaneously the whole time. And so the repeat founder thing, and we then went on and we started like a property management development company, and like we have co-founded a few things together. So I am sort of a serial founder, but in the meantime was always a professor during that entire period as well. And I remember when we sold Skyward to Verizon, I had sort of become known as like the fintech professor, and I took over all the fintech classes, and that was kind of the focus of my teaching and research at the university. And I remember thinking to myself, this was 2015. I was like, I really can't be the fintech professor without being able to explain Bitcoin. And I really wanted to add the concept of Bitcoin and what was going on in that world as like at least one day of my course. I wanted to cover Bitcoin. And so I said, where do I start? There just wasn't as much content back then. And so I started cold emailing people. And one of the people I cold emailed was Brian Armstrong from Coinbase. Coinbase was obviously a much smaller company back then. And they got back to me and I was saying like, hey, give me some data. I'm an empirical professor. I can write, some interesting things around kind of like valuation and price formation and these sorts of things. And they said, listen, we can't give you any data, but you have to meet this guy, Chris Bernisky, who is at ARK with Cathie Wood. And he's like the only person we've ever met who's thinking about the price formation and sort of like valuation models the way you are. So they introduced me to Chris. Chris, of course, famously was like, at ARK, had gotten ARK to take direct Bitcoin exposure and was writing a book called Crypto Assets. And he started sending me some of the chapters in PDFs. And that is the thing that really took me down the rabbit hole. He was sort of my Sherpa, so to speak, and learned so much from him over a series of calls. Chris, of course, eventually spun out and started Placeholder with some folks from USV. And shortly thereafter, an old friend of mine who had a traditional VC fund called Collaborative Fund reached out to me and he said, hey, I heard you've been talking with Chris and like we're also seeing deal flow around blockchains and we could use some help kind of like figuring out this space. We're now kind of like 2017. And so we started investing out of Collaborative Fund and then eventually created Collab+Currency. So why don't I pause there? That's basically how crypto entered the picture for me.
Yeah, super, super interesting. I think what strikes me is just how organic that was, where it kind of was born of curiosity and usefulness to your students and then kind of emerged into what has become Collab+Currency. I think that's really interesting. And so, let's jump to the present. Your team has invested wide and deep across pretty much every major vertical in crypto, as well as AI. And so I'm curious how you describe your firm's guiding thesis for what you're looking for in such a nascent space as crypto. We're well into the crypto story, but still early days, I think a lot of people would say. And so here in mid, what are you guys looking at and how has that changed over time?
Yeah, it's a great question. I mean, I think just as a segue from the prior sort of like personal history is that I never got into crypto with the intention of working in crypto or running a fund or, it was almost like by accident. Like I literally got into it because I thought it was fascinating. And I felt like it was a technology stack that was going to like vastly change the way finance worked. And it was more just out of sort of like genuine intellectual curiosity, more than some sort of like profit motive or a career motive or anything like that. And so the reason that that's important for this question is like that's always informed the stuff we're interested in. Like me and Derek, the two partners are like geeks first and foremost. Like we just love this stuff. We always were power users of the technology from way back, more than I think, getting into the space with a pure profit motive. We got into it out of like genuine interest. And so we've tried to hire people on our team that are the same way, that are sort of like generally fascinated by the technology and what it can be used for. And so that curiosity is kind of what guides our investment thesis. And so it has evolved over time. Like in 2018, a lot of people were doing equity deals and we did a bunch of pure equity deals. These were things that were not going to become token networks. Like we invested in Bison Trails, which was acquired by Coinbase. Collaborative Fund did Tagomi, which also was acquired by Coinbase. Coin metrics, like I can, there's just like a bunch of deals I look at in Fund 1 that were just sort of like pure equity deals because we knew that there was just so much to build and there was going to need to be so many different service providers like TaxBit on the tax side. It was like, I remember we just had this thesis where like this space can't really work unless somebody can figure out how to do all the taxes, like work at scale, right? Like we try to like project out 5 years and say, what do we need 5 years from now for this thing to really kind of go 10x or 50x or 100x from where we are now? And one was like, well, we're going to need to figure out how to track all this stuff for taxes. And so we went out and we looked at like all the tax deals and we really liked the team at TaxBit. And so we ended up investing there. And so that was like, I would say the way we approached a lot of stuff in Fund 1 is that it was such a blue ocean. It was like nothing had really been built yet. And it was kind of like, let's figure out all the stuff that needs to get built and then like go find best in class teams to build it and back them. Like that was effectively the whole thesis. There was no thesis around like verticals or anything like that. It was like crypto was just kind of like crypto itself was enough of a niche in 2018. And then I would say at the end of Fund 1, we did 3 deals that really changed the trajectory of the fund. One, so basically it was art blocks, so very large dinner primary marketplace, Super Rare, another primary marketplace for one-of-one art, and Sky Mavis, which is the parent of Axie Infinity. And between those 2 NFT marketplace deals and the gaming deal, I think it really opened our eyes to how powerful the consumer side of this space was going to be. The projects and applications that were touching end users was going to be, we thought, probably where the biggest winners were created over the span of decades. And so we really started narrowing in on that focus. And we just wanted to become the best kind of consumer Web3 investor in the world. And so in Fund 2, we really leaned into that. We did more gaming deals. We did more marketplace deals. We did lots of things around what we call culture, music and art and social. And then by Fund 3, kind of continuing with that, now we have this additional disruptive technology stack in AI. And it almost felt like back like Fund 1. It was like, all right, we're now in this massive blue ocean landscape. All this is going to change everything. Let's project out a few years and figure out all the stuff that needs to get built at this intersection of AI and crypto. And let's go out and back like whatever we think is the best team in each one of those kind of sub verticals. And so we've been doing a lot of infrastructure investments around AI, but again, with the consumer lens, with the idea is like, these are the things that are going to power the consumer applications of tomorrow. And so the short answer is like, I think we're pretty squarely in the consumer Web3 bucket at this point in terms of thesis, but it definitely was an evolution that started, I would say, about 4 years ago and has really gained steam over the last couple of years.
Super, super interesting. Okay. I love the history there too. Hey everybody, quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Now, let's get back to the show. So, jumping ahead a tiny bit, I'm always curious what people would reflect on their mistakes and how they'd reflect on their mistakes, if you even can call it that in investing. And also, predictions, like what did you get right that turned out to be correct? Because a big part of investing is obviously dealing with uncertainty, right? If you had to pick like what one narrative you were maybe most skeptical about that turned out to actually produce kind of viable and lasting projects, what would that narrative be? And then the flip side, what narrative were you most confident in that turned out to be less durable than you thought? And how would you reflect on kind of your answers to each of those?
Sure. So, I think that in terms of mistakes, honestly, one thing, I'll tell you what I think is one of the hardest things in venture investing, which is sizing, right? And so I would say if there's any mistake we've made, it's that there have been projects with which we've had very high conviction that we probably should have just written a larger check. Or, we also do some liquid investing, like we should have put a larger position on, given the level of conviction we had. And so I would say that's one thing that's kind of vastly improved as we've moved through the 3 funds. In terms of narratives I was skeptical about that have turned out to be pretty substantial, I have to admit I was somewhat skeptical of like the staking category. This is like way back, like 2018, 2019, when staking was just starting to be a thing. And we were seeing a lot of deals for staking companies. We did eventually back one in Bison Trails. But I remember when we were first looking at it, it just felt to me like this was going to be a commodity service, and eventually there would be dozens of these guys and they would all compete the rates down to 0. And it was going to be tough to build a really large and valuable kind of venture return sort of business in staking. And I would say that has pretty clearly been proven wrong. Figment has built a massive business. block daemon running nodes. Like I would say there's a bunch of things that I thought were sort of commodity services where people really have been able to carve out a brand and develop, the trust, like a trusted brand, and have built things that became enormously valuable. So that was maybe one thing I was skeptical of. On narrative, I was confident about that have been less durable. I guess I would say maybe I would change the word less durable to haven't manifested yet. So kind of, somewhat famously, I spent a lot of time thinking about security tokens, which are now people refer to as RWAs, or real world assets. That was really the lens through which I got in the space. And probably not surprisingly, like I was a finance professor. I mostly wrote about securities. And so when I first saw blockchains, I was like, wow, that would be really useful for securities. Like if we can just move all of these traded assets that we have that are on all these siloed exchanges all over the world, and even inside the US, like it would be amazing to put all of this on one technology stack. So I wrote this paper called Traditional Asset Tokenization in 2017. And then I followed up with another paper called The Security Token Thesis in 2018. And I would say like clearly it did not take off as fast as people had hoped. I do point out to people that I said in the article, this is probably going to take decades, because the truth is like rewiring the global financial system isn't going to happen overnight. Like there's a lot of people with a lot of vested interest to not have the way things work change. And so there's a lot of friction. There's regulatory friction. There's so many things that make it very slow to bring the world's assets onto this technology stack. And so I wouldn't say it was less durable. I actually still believe most of what I was describing in the security token thesis. I do think it's a better stack for securities of all types. That's stocks, bonds, real estate, commodities, like you name it. I do think this is a better tech stack for which I think virtually all assets in the world will eventually migrate and trade. But it clearly has been a long time coming. Now, there is like a renewed interest around real world assets on chain now. Like Larry Fink from BlackRock is talking about it. And it's interesting and actually kind of fun to see people get excited about this thing again. Because, I mean, we were talking about this like 6 and 7 years ago, but it just never really, I mean, Securitize, like Carlos over at Securitize has been just one of the long time kind of stewards of the security token and RWA movement. And I would say they kept plugging along. And now it's great to see them kind of like being able to draft off this renewed interest we've seen over the last year. But that has been, it has taken a long time. And I believe it is still going to continue to take a long time. And so that's probably the narrative that I'm most associated with, that I think is going to be a very long and arduous process to bring to realization.
Yeah, it makes sense. Super, super interesting. Okay. So on this podcast, I've heard from folks like Griff Green, kind of Ethereum OGs, that once upon a time in crypto, you could kind of keep up with all the news in the space relatively easily, right? Whereas now it's obviously, there's so much thinking and so many projects that it's kind of tough to keep your pulse on exactly what all's happening in any given day. But I'm curious for you, like, where do you think the most interesting conversations are happening in crypto these days? And maybe what are a few of those conversations that jump out to you as especially worthwhile to pay attention to?
Yeah, it's a great question because Griff really nailed it in the sense that like, I remember when we started this fund in 2018, you could kind of cover everything. Like you could, even then it moved really, really fast. I remember people saying this is the fastest moving kind of like technology category that they had ever seen. But if you really dedicated yourself to it and you spent all your time focusing on it, you sort of could keep up with everything that was happening in crypto back in 2017, the ICO boom, I think like tested that a bit because there were so many projects launching all at the same time. But like in that 2015 through 2018 era, like you mostly could keep up. Then once we went through DeFi summer and sort of the NFT boom in 2021, and then obviously so many different things that have happened since then around restaking and like just a million different verticals that have developed, it's now impossible. And it's one of the reasons Derek and I hired out a pretty substantial team in 2022 is we realized that it was impossible for us to cover everything in the depth that we really wanted to be able to make intelligent investments. And so we hired out one team member that focused entirely on AI, one team member that focused entirely on gaming, like one team member that focused entirely on culture and fashion. And by hiring these kind of like vertical specialists, they could spend all their time within a single vertical just trying to keep up, and then sort of like bring the most interesting stuff back to the team for debate and eventual investment. And that's sort of like the only, and again, we're not even really a generalist fund. I mean, this is just within kind of like the consumer side, which people would consider a vertical in and of itself. We're really not doing a lot of financial services. There's definitely categories of infrastructure we don't do. And so even just within our one vertical of consumer, there's like all these sub verticals. So I guess that's how we've tackled it, is really just hiring out a team of experts. And the most interesting conversations, I mean, I'm biased because this is the stuff we really focus on, but I would say the intersection of AI and crypto is, I think it's going to be the most interesting thing for some time. It certainly has been one of the most interesting things over the past 12 months. And I think that conversation is only going to continue to accelerate. And then I think the other kind of intersection is crypto and extended reality, or really like maybe immersive environments is the better term, whether that's things like Apple Vision Pro, which is just it's going to change the way content is produced. It's going to change the way content is consumed. And even if you step away from something like a hardware device like the Vision Pro, just immersive environments like gaming, people are spending more time. We're going to see this merging between what we kind of traditionally have thought of as gaming and what we have kind of thought of as social, right? Those have been separate. Like, World of Warcraft is one thing, and then like Twitter and Facebook are a different thing. And I think eventually, like, we're going to see basically a convergence of immersive environments and social. And so I guess for us, those are the things we're paying attention to.
Super interesting. Okay. So I'd love to take a step back and maybe just talk a little more broadly about the space, kind of drafting off that last question there, where I'm curious how you would narrate our current moment within crypto. I think, a lot of positive tailwinds and a lot of recovery over the past, say, 18 months. But I'm curious for you, like how would you situate the listeners in what's happening right now in crypto?
Yeah, it's a really interesting time in the space because, as you mentioned, there has been a tremendous amount of recovery. I mean, really starting from about mid-October through the end of March, we just saw tremendous price appreciation, particularly in the large caps and many of the alts as well. And so like people's spirits are high again, right? Like, I mean, people were so depressed in the middle of last year, and we can unpack that a little bit more in a moment if you like. But basically, like, this recovery has sort of changed the sentiment in the space, right? So people are excited again. Builders are excited, capital's getting raised for these projects again. Like, everything feels very healthy right now. And I say that because when things get too overheated, it starts to feel unhealthy in the other direction, right? So, if you think about like early 2019 or, 2023, like obviously up until October, they're unhealthy from the opposite side of the pendulum. Like, people are so depressed, and like, new formation of companies starts to slow down, and capital is hard to raise. And then on the other side, when things get really frothy and valuations go crazy, that ends up being ex post not healthy either, because then teams have to end up raising down rounds down the road, and like just a million things are sort of unhealthy when it gets crazy frothy, like a bunch of newcomers in the space, and then they get wrecked, and then there's like reputational issues. And so weirdly, like where we are right now feels like about as healthy as it can get in crypto. It feels like people are excited, but like without the froth. So I hope we can kind of stay in this little plateau for a while. Ideally, it emboldens us, I would say, at the fund. The fact that it does feel very healthy right now. And I think the current moment is excitement. We're starting to get the right infrastructure to truly onboard the masses, which plays into our thesis around kind of the consumer side of Web3 eventually being like the largest segment of Web3. I mean, we very much think of this as a social technology as much as a financial technology. And so, yeah, we're just like really bullish about where we are in the cycle. I think the convergence of the different sort of disruptive stacks I mentioned a minute ago, like XR and AI and crypto, I would say like it feels good right now to us.
Very cool. Okay, awesome. So maybe a couple last questions here for you. I'm curious because you mentioned newcomers to the space just a second ago, and I'm curious from your side of the table, like what advice would you give to new founders in Web3? What have you seen that could help guide new founders away from the rocks, away from the hurricanes, whatever metaphor you want to use, right?
So I think just like quickly, two things. One is like, you got to raise enough capital to try and get through the downturns, because the downturns are brutal and it can become very difficult to raise capital. Like it was very difficult to raise capital in 2022 and the first half of 2023. And for teams we had that were running out of capital in those moments, it was rough. And so that's one piece of advice, is just try to make sure you're well financed. But the other, I would say, larger piece of advice is like, maybe this is almost the same piece of advice, which is like, you've got to survive the bears. Like the teams that can kind of like not give up effectively. So this is like why we feel like grit is so important when we think about founders and founding teams, is like, you got to get through those really tough periods in order to like sort of reap the rewards once we get into the bull. And this is true of founders. It's also just true of investors, employees. Like so many people were leaving Web3 in early 2023. And it's funny, I remember I was at a conference with Olaf from Polychain, and he's obviously been, I think this is maybe my third cycle. He's probably been here for, I don't know, all the cycles effectively. And somebody was asking him what feels different about this bear market compared to previous bear markets. And he said, absolutely nothing. Like it always feels this shitty, like at this point in the bear market. And you always get these weird things where, or not weird, but like you get these phenomenon where people start leaving the space. Founders fold up shop, employees start leaving the companies and going back to other segments of technology, like investors shut their funds down. Like it always happens. It's happened at every single down cycle. And it's like never the right decision for the most part. And so we were trying to convince our founders of that. And thankfully we didn't have very many founders kind of close up shop. But the truth is, like, it can be very mentally taxing to get through them. I mean, you, I'm sure, know this as well as anyone. It's like, it always feels like it might not ever come back, or at least that's what your brain, like your monkey brain, wants to think. Like, man, is this ever coming back? And the truth is, it always comes back, or at least it has historically in crypto. And so I would say each one of these we go through, you get kind of like hardened in a sense. So like in this last downturn, I mean, Derek and I were sort of like never worried. It honestly didn't even feel as brutal as like the 2018, 2019 downturn. And that downturn didn't feel as brutal as like the 2014 downturn. So, weirdly, like each one of these things, it kind of gets easier to tolerate. But for newcomers, which is, I think, was the point of your question, that first bear market, it can make you want to give up. And so I think the main piece of advice is like, you got to not give up.
Great advice, Steve. Okay. So last question here for you. What is your team working on right now? And what's the best way for people to follow along on the Collab+Currency journey?
Yeah. I mean, our team is, I guess, working on most of the stuff we chatted about here in this podcast: crypto, AI, extended reality, immersive environments, kind of the consumer side of the space. Best way to follow along is probably on Twitter or X. I think it's just at Collab+Currency. If you search Collab+Currency, you'll find us on there. And then obviously you can follow our investors independently. Each of them has their own account as well. In terms of writing, we do some long form writing as well. That's going to be on Medium. So if you go to our website, collabcurrency.com, you can find links to all that stuff.
Okay, awesome. Thank you, Steve, so much for coming on the show. Really fascinating insights, and it's been great to get a kind of closer look and kind of hear from you guys what you're thinking about and what you're up to. So I'll for sure be following along myself, and thanks again. Have a great rest of your week.
Thanks, Tanner.
Okay, bye-bye. Hey everybody, thanks for listening. If you enjoyed the episode, go ahead and maybe give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations with the most interesting crypto founders, investors, and builders from across the world. Thanks so much. Have a good one.